Perfect. So here we go. Good morning, everyone, or good afternoon, or wherever in the world you are. Australians, it's probably in the middle of the night for you. Welcome to this series. We just started a new series, and we call it the Day Trading Series. What we'll do today in the first chapter, we'll talk about some day trading basics. Because you'll be surprised. Most people who are calling me here say, "Can I have your strategy? Can I have your strategy?" Guys, do understand a day trading strategy is very important, but there's more to trading than just having a strategy. So today, we want to lay the foundation for the upcoming parts. And what we agreed with fxstreet.com is that over the next 5 months, we will have this series, and we'll have it every first Tuesday of the month. And I see already some faces that I've seen here before, so you already got used to the first Tuesday of the month. Well, here's the deal. Since the first Tuesday in January is January 1st, we'll of course skip that, and therefore, January 1st, believe me, I won't be able to give a webinar here. So we'll do it on January 8th, but we'll repeat this towards the end of the presentation here again. My name is Markus Heitkoetter. I'm the CEO of Rockwell Trading. I think I've been giving webinars here on fxstreet.com for the past 2 years. I've been trading for more than 19 years, and you can read the rest of my bio on fxstreet.com. I don't want to bore you with facts about myself. You can read this up. You can Google me on the internet, and you'll find a lot of articles about me and lots of information about me. What we want to do today, as I said, is laying the foundation for the remaining parts of the series here. Yes, absolutely. We will talk about day trading strategies. I will show you how to create a day trading strategy. I will show you how to evaluate day trading strategies. But as I said, there's more to trading than just having a strategy. So let's see. We recently, I think it was in July or August, surveyed 800 traders and asked them, what do you think would help you to achieve your trading goals? And we really phrased it as an open question like this. So we didn't have a selection. We really said, okay, guys, what do you think would help you achieving your trading goals? And obviously, the traders we interviewed were not yet achieving their trading goals. So these might have been traders who are right now struggling a little bit. They might even lose money, they might break even, or they might even make some money, but they're not yet consistently profitable. So we asked them, and after surveying these 800 traders and evaluating, we had a team of 3 people here evaluating all the answers. Here's what came up. 34% of traders said, I would be successful if I had a good trading strategy. 34%, a third of the traders. Another 23% said if I had proper guidance. And another 17% said if I had the right knowledge. Well, guys, you're in the right place here with fxstreet.com because you're getting excellent knowledge transferred through this webinar here. fxstreet.com is a website full of information, and daily they're conducting a lot of free webinars where you can acquire the knowledge here. So you see, where are we? We're at 75%. This is what these traders said. Most of them said if I had a good trading strategy. Is this you? Do you believe, actually, if I would give you right now a profitable trading strategy that you would be able to make money in the markets? Based on my experience, no. And I'm not the only one. You might have heard about the Ralph Vince experiment, an experiment that Ralph Vince did several years ago. I would have to look it up when exactly it was. Here's what happened. Ralph Vince took 40 PhDs. So you would assume that these are somewhat smart people, right? So these 40 PhDs, he gave them a trading system in a simulated environment. The trading system had a 60% winning percentage. The starting capital of all these participants in this experiment was $1,000. They were about to place 100 trades. And the profit target in this trading system was the same as the stop loss. And here's how it worked. You had a $1,000 account. You could bet any amount. If you won exactly the amount that you bet. So for example, if you said out of the $1,000 account you wanted to bet $200, and then the computer simulation said, yes, you had a winner, you won $200. If you lost, of course, you lost the whole $100. See, very, very simple. So the profit target was the same as stop loss. And as you can see, since this was in a controlled environment, this was a computer experiment here. Absolutely, they had a profitable trading system. Guess how many won? Okay, here's the deal. 95%, 38 people lost money with a profitable trading system, because the reasons why they lost was a gambler fallacy and poor money management. And you see, this is what many aspiring traders don't get. There is more to trading than just having a trading strategy. Yes, a trading strategy is absolutely important, and we'll talk about it in our second session. Why you need a trading strategy, why it is so important, and what exactly you have to do to make sure that you have a good and working trading strategy. There's more to it. And you see, the problem why these people lost with a proven, profitable trading strategy is because of them. So who's the problem in the markets? The problem, yes, is you. Not me any longer. It was me for a long time. I was fighting myself. So anyhow. So I'm repeating this over and over again because this is so important, and traders tend to forget what are actually the problems when they are trading. The 7 problems of traders, and let me quickly run them down and then we'll talk about it, because this is what we want to cover today. Problem number 1, struggling to identify the direction of the markets. Guys, you know it. What are the 3 directions the market can go? Up, down, or sideways, right? And you need to have a strategy for each direction of the market. You cannot just have a long strategy, because the market moves in 3 directions, so you have to be prepared. You need to have at least 3 trading strategies for each direction of the market. Now, your short strategy can be a mirror of your long strategy, so you can just do the opposite, there's no problem. But you do need to have also a strategy for sideways moving markets, because as we see these days, the markets are not always moving up or down. There are some times when they're moving sideways. There are some times throughout the day, for example, in the lunch hour, in the evening hours, and in the overnight session, when the market is not moving, and there are even some days when the market is not moving. For example, ahead of a major announcement. You remember, for example, last Thursday in the evening, Bernanke was about to speak. What happened to the market throughout the day? The market was barely moving for 2 reasons. First of all, on Wednesday, we had this enormous up move in the market, in the stock market. So the market was going up, the S&P was going up 30 points throughout the day, considering the overnight session, 50 points. So the next day, on Thursday, the markets took a breather, and they were waiting what Bernanke said. Okay? I mean, this guy can talk at a wedding reception and will move the market. The problem number 3, after not taking profits, is not limiting your losses. Problem number 4 is trading the wrong market. Problem number 5, finally, here we are, is the lack of a trading strategy. See, absolutely, you do need a strategy, but it's this one out of these 7 problems. Problem number 6 is not controlling your emotions, and problem number 7 is overtrading. So here's what I would like to do. I would just give you a brief rundown of the problems here. Tell you a little bit more about them and how you can avoid them. Because this is essential that you have the right mindset of a trader before you actually start trading with a strategy. Because as you have seen, a strategy alone does not really help you. So let's go ahead and let me see what we can do here. Okay, just to make sure that I'm getting all the information. Okay, well, we talked about, let me just leave this slide up. So let me capture the slide again. Otherwise, we have some problems, because on the following slides that I was about to show you, there are some animations are probably not really good. So, what do traders do in order to identify the direction of the market? Well, first of all, the wrong assumption that you have is that you want to be able to predict the market. Please understand, you cannot predict the market. We are talking about probabilities. When you take a look at a chart, you can only say, well, it is more likely that the market will continue to go up, it is more likely that the market will continue to go down, or it is more likely that the market is going sideways. And you know what? Doing this, you can use a simple bar chart, or sometimes even using a simple line chart. You don't need a bunch of complicated indicators. My favorite indicators, if you want to call them like this, are moving averages, okay? And you know how it works. When a moving average is pointing down, then the market is probably going down. When a moving average is pointing up, the market is going up. So this is very simple to see whether the market is going up or down. And the second tool I like to use is simple trend lines. Now, I do not believe in a bunch of indicators and combining them. I mean, just yesterday I talked to a trader. He's using 5 different moving averages, the money flow, the RSI, stochastics, and something else. Okay? First of all, you need to understand some basics about indicators. Indicators belong into 2 categories. Either they show you, either they are trend following or trend fading oscillators. Okay? So trend following indicators that are indicating a trend are, for example, moving averages, or for example, the MACD. For example, it is the ADX. Indicators that are showing you whether a market is overbought or oversold are oscillators, and this is, for example, the RSI. Okay? So make sure that you understand what indicator you're plotting there. Also make sure that you still pay attention to the price bars. Guys, the prices are the most important variable in the market. Okay? All indicators are based on 5 variables: the open, high, low, close, and volume. That's all we have at any given time. So why not take a look at a bar chart or maybe a candlestick chart? Bar charts and candlestick charts give you the most information and basically all the information you need. And if you have time throughout the end of the session, I'll show you how my charting software looks like, what I'm exactly looking at. If you don't have time today, don't worry about it. We'll definitely take a look at these strategies that I'm using here in the upcoming sessions. And to be honest, I am using 5 different strategies. And here are the 5 strategies that I use. I have 2 strategies for a market that is going up. I have 2 strategies for a market that is going down. And I have 1 strategy for a market that is going sideways. Why would I use 5 strategies? Why would I use 2 strategies for a market that is going up? Well, as you know, these days, whatever market you're trading, whether you're trading currencies, whether you're trading futures markets, or whether you're trading stock market, we do not know how long a trend will last. And in many markets, the trends are rather short-lived. There are some markets where you have fantastic long-lasting trends. For example, the grain market, wheat and corn. Fantastic trend. Sometimes, yes, you have them in the Forex markets too, in the currencies. You have some long-lasting trends. But many times when we see... yes, moderator, it is correct that you have the same problem slide, because the other slides that I'm about to show have many animations here, and as it seems, we have some problem displaying them. Okay. As I said, in many markets, trends are short-lived. Look, for example, at the stock indices. If you're looking at the E-mini S&P or the E-mini Russell, what you see usually that you have the market moving in one direction in the morning, then reversing, sometimes even before the lunch break. In the lunch break, then turning around again and having maybe a 4th short-lived trend towards the end of the day. You see, with this, I'm having a strategy to ride the short, long, and short trend, this very short-lived trend, and take profits quickly. As an example, in the E-mini S&P, I like to risk 2 points to make 3 points. Of course, I then have a strategy where I can take advantage of moves like we had last Wednesday, when the market is moving 30 points in one direction, or like we experienced this morning in corn, or in other markets, or sometimes when we have it in the Forex market and it's really moving. You want to have also a strategy in addition to this short, let's say, scalping strategy. It's not really scalping because I'm talking about 2 and 3 points. In the Forex markets, by the way, I'm using 10 pips and 20 pips. You always, very important, and this is when we talk about the next profits here, okay, not taking profits and not limiting your losses. You always want to have a profit target that is larger than your stop loss, and we'll come to this here in a second. Anyhow, so these are the 5 different strategies. 2 long, one where I take my money off the table quickly, another one where I try to capture a trend if I know that I'm trading a trending market. Okay, that is difficult. Anyhow, you recognize my accent? It's German. Okay, for those of you who don't know me yet and who are wondering, I think my name probably gives you a hint. Some say that I have an Irish accent. No, it is a German accent. But I'm living in Chicago and in Texas, so there's probably the Texan influence that makes the German accent Irish here. Anyhow, let's move on to problem number 2 and number 3. Not taking profits and not limiting your losses. Guys, please understand, good traders use a stop loss. Great traders use a profit target. And this is what you will learn. You always, when you start trading, before you enter a trade, you want to know when to exit a trade. And keep it simple. We are talking about day trading basics here today. So you want to keep it very simple, and here's what you want to do. In the beginning of your trading career, you want to use a fixed profit target and a fixed stop loss. Do not mess around with trailing stops or trailing profit targets or anything like this. If you can make money with a fixed profit target and a fixed stop loss, then you can start fine-tuning your strategy. But believe me, if using your trading strategy that uses a fixed stop and a fixed profit target, you do not make money. You will not suddenly make money if you tamper around with the stop loss and the profit target. You always want to have a profit target that is larger than your stop loss. I told you, in the Forex markets, I'm using 10 pips as a stop loss and 20 pips as a profit target. In the mini S&P, I'm using 2 points as a stop loss and 3 points as a profit target. In the mini Russell, I'm doing the same. 2 points stop loss, 3 points profit target. The same in the corn market that I'm trading. Yes, I'm trading a bunch of markets here. Why wouldn't I? A chart is a chart. A market is a market, right? So I'm looking at 6 markets every single day and then see which market has the nicest moves. And today, for example, it is the corn market. So why not trading it? Don't stick just to one market, and we talk about this in problem number 4. Let me just give you another example. The wheat market, a fantastically trending market. Quite liquid, so you can trade it. You can trade there, no problem, 10 or 15 contracts. And you can actually risk $100 to make $250. Isn't that fantastic? See, if you have a profit target that is larger than your stop loss, then you will make even profits with a winning percentage of only 50%. And believe me, a winning percentage of 50% is rather easy to achieve. Do not fall for the trap where you use a trading system where you take small profits and have a rather large stop loss. You want to avoid a trading system where you have maybe 8 winning trades and 80% winning percentage. Fantastic! So you have 8 winning trades and the 9th trade is taking all your profits away. Don't do this. Always, if you're using a trend following system, if you're using trend following strategies, you want to have a profit target that is smaller than your stop loss. And I just recently, 2 months ago, I adjusted my trend fading strategy. In my trend fading strategy, I had a higher winning percentage, and therefore, I used a stop loss that was equal to my profit target. Just scratch this, and now also my profit target in my trend fading strategy is larger than my stop loss. Problem number 4, trading the wrong market. Okay, this is one problem of many traders. Many traders are just fixed on one market. They are just trading, let's say, the euro versus the dollar, or they're just trading the mini S&P, or they're just trading the mini Dow. Guys, you need to be flexible. There are so many markets out there that you can trade. There are so many liquid markets. Just understand, in order to make money in the markets, 2 conditions have to be met. You, as a trader, have to be ready, and the market has to be ready. If the market is not moving, if the market is just going sideways, it's difficult to make money, especially if you just have one strategy, and this is the trend following strategy. But yet, this is what most traders have. Most traders that I meet, that are not yet as successful as they want to be, to avoid the term losing trader, but you know how it is. I mean, recently the NASAA, the North American Securities Administration and Association, published statistics. And they said, based on these statistics, where they interviewed or watched thousands of traders, 70.5% lose money in the markets. Okay? Another, I don't know, somewhat like 18% are breaking even, and only 11.5% or 11%, something like this, are making money in the markets. Well, we always knew this, right? You heard this. But 90% of traders are losing money and only 10% are making it. The 90% that are losing are the traders who are just trading one strategy and one market, and they wonder why they're not successful. Also, just yesterday, I talked to a trader, nice guy, really nice fellow, but he had a trend following strategy and wanted to trade it every single day in the E-mini Dow. This doesn't work because the E-mini Dow does not trend every single day. Okay? Sometimes it is going sideways. So make sure that you are picking a market that is right for your trading strategy. If you have a trend following trading strategy, you want to trade a market that is trending. Or you start using more trading strategies, okay? And this brings us to the next point here. Problem number 5, the lack of a trading strategies. Guys, as I said, define your entry rules. Here are the 5 elements, and again, I'm sorry that I can't show it on the slide here right now. Here are the elements of a trading plan, and what I will do here is I'll type it down in the chat. How's that? Okay? Let me type it down in the chat, the elements of a trading plan. You need to have a trading plan. The first thing that you want to do, you want to define your trading goal. Okay, you want to write down how much money you actually want to make with trading. So this is the first element of your trading plan. Always make sure that you have your goal inside, whatever you do in life. Okay? You heard about this. Many successful people talk about it. Tony Robbins, Brian Tracy, Jack Canfield. Rhonda, whatever, from The Secret, they all say, have your goal inside. Same when it comes to trading. Second, you then you define the markets you want to trade. Okay, this can be, I don't know, 1, 2, 3, 4, 5. As I said, I encourage you to trade in multiple markets. At a minimum, watch 3 markets. I'm not trading only about 3 currencies, okay? 3 different markets, preferably 6 markets. Do not watch more than 8 markets, because it can be the smartest person in the world. It's getting very, very difficult, challenging, and stressful if you're watching more than 8 markets. Third, what you want to do, you want to define your time frame. You want to write this down. Say, okay, my trading goal is to make $20,000 a month. I'm trading the following markets: the E-mini S&P, the E-mini Russell, electronic corn, electronic wheat, the euro currency, and the bonds. For example, I'm trading on a 15-minute time frame, and we'll talk about my trading plan in the next session here, so you'll see exactly what I'm doing. Fourth, what you want to do, you want to define your trading strategy. Okay, let me say, what kind of strategy are you using? Underlying, you'll see it here in a second. Assumptions. Okay, so very briefly you define, do you have a trend following system? Do you have a trend fading strategy? What is the underlying assumption of this trading strategy? Do you have a breakout strategy, like for example turtle trading? Do you use parabolics? And please make sure whatever you use, if you follow for example the RSI and use a strategy based on the RSI, can you actually please write down what the RSI does instead of just saying, well, if it goes above 80, it's oversold, it's overbought, and if it goes below 20, it's oversold. Make sure what exactly an indicator measures. You can look it up on the internet, Wikipedia, whatever is out there. There are many websites where you can see how actually it's calculated and what did Wells Walder here wanted to do, okay? So what exactly did he define? Now, the fifth is that you want to define your entry signals. And actually you have, of course, 2 entry signals. You have 5A, you have your long entry signals, and 5B, you have your short entry signals. Okay, so these are the two entry signals that you want to define. Now, in my book, this shouldn't be longer than 2 lines. If you need more than 2 lines to define your entry signals, you made it too complicated, and you won't be able to actually follow the strategy in live markets. The market is moving, sometimes it moves fast. You don't have the time to use a calculator and, I don't know, to look at 5 different indicators, especially not if you watch multiple markets. Just think about it. If you watch 6 markets at the same time and you're watching 5 indicators, you have to look at 30 different things at the same time. How can you be sure that you make a good trading decision here? So you want to keep it simple, and you want to write it down in 2 lines. More than 2 lines, you probably already curve-fitted your trading strategy to just one market. Now, 6th element, you want to define the exit signals. And there are actually 3 exit signals that you want to use. And again, you want to distinguish between long and short. You want to define a profit target. You want to define your stop loss. And you want to define 6C, a time stop. I won't go into the concept of the time stop here today because we'll cover it in the next session. A time stop is very important. If the market does not move in your direction or against you within a certain time, you get out of there, because then the underlying assumption is wrong. Right? Very important. 7th, and this is what I call other rules. So what would be other rules that you define? Well, this is, for example, where you define trading times. Okay? When exactly do you trade throughout the day? Me personally, I just trade the first 2 hours after the market's open, and there's a reason for it, and we'll talk about this in the next session here. Why it makes sense to only trade in the first 2 hours of the trading. You want to define what do you do on holidays. Okay? Do you actually trade on holidays even if the market is open? Do you trade a day before holidays? Do you trade a day after holidays? You want to define how will you handle reports. What's happening when a report is coming out? Do you play the reports because you know when a report is being released, there's volatility in the market, so do you bracket the market and hope for a breakout? Or is your trading strategy calling for, I don't know, stay out before a report comes out? I personally do not like the volatility that I see when reports are coming out, so I try to stay out. I'm getting out of a trade 15 minutes ahead of a major report, and I'm getting back into a trade 15 minutes after a report. However, there are strategies how you can play the volatility of the report by bracketing the market. So we just want to define this. What else? Money management. Okay? You want to define what is the maximum amount of trades that you want to do throughout the day. How much are you willing to risk throughout the day? Is it $1,000, $2,000, or just $200? When do you increase your position size? What happens after a loser? Do you increase your position size? Do you leave it at the same? If after 2 or 3 losses in a row, do you continue trading? Do you stop trading? And so on. So these are all some other rules that you want to incorporate here. And these are the 7 major elements of a trading plan, of a trading strategy. So please make sure, even if you have a trading strategy right now, that you write it down. And in my book, for the trading templates that I'm using here, my trading strategies, this is no longer than 2 pieces of paper. So 2 letter size piece of paper, and I have all my rules written down, and I can review them every single day. All right, let's move on to problem number 6, not controlling your emotions. And you might have heard about this as traders. The emotions that we face are greed and fear, right? Markets are driven by greed and fear. Yeah, of course. I mean, greed and fear are 2 major emotions that we are facing as traders. Because we are getting greedy, we want to make a lot of money. This is why we are trading. Just recently, I ran into a book. I think I saw it in Barnes & Noble, where I frequently hang out because I love it there. They have good coffee, and I mean, it's always great to get some ideas from other folks, whatever section you're in. I mean, trading, I don't like it too much, to be honest, okay, but there are many other sections that I really enjoy in Barnes & Noble. However, I stumbled across a book that said, millions in minutes. That's what we want to do. How about that? Making millions in minutes. This is what these author was programming. So he's playing with the greed. What about fear? We do know for a fact that losses are part of our business. Yes, We do not want to experience any losses. We don't like losses, and that's normal. Who likes to lose in life? I mean, come on. I mean, when you were a kid and you were playing, you wanted to win, right? If not, there's something wrong with you as a kid. I mean, I have a 2- and 4-year-old. They play to win. Okay? We try to teach them differently, right? This is what we do. Well, we play to have fun. We don't play to win. Well, let me tell you, when you are trading, you are playing the money game, and you are playing the money game to win. Don't fool yourself. You're not playing the money game to have fun. If you do, then you're just a gambler, and you might as well go to Vegas. I mean, there's nothing wrong. I don't judge you if you're just a gambler, if you just play for fun. But most professional traders, all professional traders that I know, they are playing the money game here to actually win, to make money. This is what we want to do. So we want to make sure that we are controlling our emotion of greed and fear, but there's so much more. For example, panic. And this is what happened to a trader at the beginning of November. I mean, he said, I was in a trade, I was in a euro trade, and it all looked good, and suddenly, for unknown reason, the market jumps up and down like crazy, and I panicked. I didn't know what was going on. So I called my broker, and I said, what's happening in the market? What's happening in the market? Well, Chicken Little, right? What happened in the market is the unemployment report was released. And I told you, when the major reports are being released, this was on November 2nd, then the markets are volatile. So you want to make sure that you're not panicking, that you have a prepared response, whatever the market does. And this is what you have if you do have a written trading plan, not just in your head. Oh, I know when to take profit. No, you don't, because you'll be greedy. I know when to get out. I have a mental stop loss. Yeah, how well does a mental stop loss work? You know this. Don't fool yourself. All right, what else? Well, what are other emotions that we are having here? Indecision, a big one. Indecision. Is this a good trade? Should I get in right now? So you're doubting yourself. You're not quite sure. Now you are in a trade, and since you do not have a plan, you ask yourself, should I take money off the table right now? Or should I let my profits run? How much longer will the market go? So you don't know exactly what it is. Indecision when the trade goes against you. Was this just a correction? Will the market go back up again? Should I give the trade a little bit more room? I mean, today is a volatile market, so maybe my $100 stop loss is not good today. I should use maybe a $200 stop loss. Don't do this, okay? Don't let emotions go into your way. If you want to succeed with trading, you have to be a robot, a trading robot, okay? Don't let emotions get to you, because this is when you start panicking, and this is when you start deviating from your trading plan. So let's move on, because we have just a couple of more minutes. Problem number 7 is huge, big problem for basically every aspiring trader. Everybody who starts off trading will face this problem, and it is overtrading. We are overtrading for 3 reasons. None of them is actually good. The first reason why we are overtrading is because of our emotions. We are greedy. We start trading Monday morning and everything looks good, and the first trade is a winner, and hey, we're making money, and we put on the second trade, and the second trade is a winner, and now we are on a roll. Today is our lucky day. So today we make our millions in minutes, and we keep on trading because we're not satisfied after 2 winners. I mean, after 2 winners, what the heck? Let's go on. I lost so much money in the past, so now today I'm making it all back. I know exactly what's happening if we keep trading because we are greedy. No, we face the first loss. But, well, no problem for us. We just keep trading, right? So we face the second loss. And now, basically what happened is, 4 trades later, all our nice profits from the first 2 trades were gone. And now we run into the second reason why we are overtrading. It's revenge. Okay, we want to get the money back that we just lost. I mean, come on, we already were up for, I don't know, maybe $1,000, and now we gave it back to the market. So, come on, let's do it. It's a gambler's policy. Remember of the Ralph Winch experiment? Why these 38 PhDs lost, while 95% of the traders with a profitable trading strategy lost? It was exactly because of this problem. Revenge trading. Okay, I lost. Now I want to have it back from the market, especially us guys, okay? Us at the market. We fight for our money. We fight hard for it. Yeah, the market is stronger. This is, by the way, why the women are the better traders, typically, normally. My wife is a better trader. She stopped trading 4 years ago, almost 5 years ago, when my son was born. And now we have 2 kids and she's busy with them, so she can't focus on day trading. But she was better, because women are usually faster in admitting that they're wrong. Us guys, we don't do this. We're never wrong anyhow, right? Yeah, the market teaches us differently. The third reason why we overtrade is because we have this weird feeling that we have to trade, because if we don't trade, we don't make any money, right? Well, if you don't trade, you also don't lose any money. Well, you see, this is where many, especially people who are new to trading, are sitting in front of the market. There is nothing to trade, but you have been watching the market already for an hour. You think after an hour, it's about time, so I should start trading. And what you do right now is you just take a trade that is not according to your trading plan, where not all your ducks are lined up. A trade that is just barely okay, or it's absolutely not in your trading plan, it's not in your book, because you think, I have to trade, this is my job. Because we are all trained this way. If you work hard, right, then you earn a lot of money. Well, when it comes to trading, this is no longer true. You have to be smart and not hard. Making more trades does not mean that you're making more money. In fact, I'll prove to you in the next session, making less trades will help you to make more money. Okay? So these are the 7 problems. And now I have to forward here a little bit to the slide that I want to show you right now, and go through the slides that have these motions. And here's what we want to do. Okay. Now let me bring it up here again, and then I'll refresh the slideshow. See, what I want to introduce to you over the next couple of months here, we will go back to the basics, because trading can be simple. Is it easy? No, trading is not easy, but it can be simple. So what I want you to take from today is basically these 3 secrets, and you want to print them out. I don't know if you can. Take a screenshot right now. Print them out. Put them on your desk. Stick them on the wall. These are the fundamental basics, and I'll show you here in a second how you can apply them. First of all, you want to trade in the right direction. This means you want to buy if the market is going up, and you want to sell when the market is going down. As I said, later on, if you are successful with this strategy, then you can start trading trend following strategy. So what we are talking about here in the beginning is a simple trend following strategy. You take a look at the market, you see that the market is going up, you get in and you get out quickly. You do not try to pick bottoms or tops or anything like this, because believe me, you won't be able to do this on a consistent basis. It takes a lot of skill. So start with the basics. Start with a trend following strategy, and this is where you can have maybe one strategy for a market that's going up and one strategy for a market that's going down. Preferably 2 strategies for each direction, so that you started with 4 strategies, and you want to buy when the market is going up and sell when it is going down. Also, from today on, you will vow that always when you enter a position, you will know exactly when to exit. You will know when to exit with a profit, and you will know when to exit with a loss. If you haven't worked with profit targets yet, start doing it today. Believe me, it will help you tremendously. And as I said in the very beginning, what I would like you to do, work with a fixed profit target and a fixed stop loss. You can express it in points as I did, you can express it in dollars, you can express it in percent, whatever you want to do, but start with a fixed profit target and a fixed stop loss. If you are trading in the right direction, and if you're using a fixed stop loss and a profit target, with a profit target that is larger than your stop loss, you should be able to make money. If you don't, you have to go back to secret number 1 and make sure that you can identify the direction of the market. And remember problem number 1. The biggest problem that traders have is they struggle to identify the direction of the market. They are not quite sure, what actually am I looking at? Am I looking at a market that is going up, down, or sideways? And this is why they use a bunch of indicators hoping that these indicators will help them. And some might help you. But believe me, indicators are a crutch. They are like your training wheels. Later on, you should be able to take a look at any chart and tell me in a split second whether this market is more likely to go up, down, or sideways. And yes, it takes practice. This is it. Can trading be simple? Look at the secrets. Yes. Is it easy? No. It takes practice, practice, practice. You won't learn it here in one webinar. Secret number 3, trade the right market. And as a beginner, if you're getting started here with the basics, the right market to trade is a trending market. So you want to make sure that you're looking at a trending market. And if you're trading a market right now where you look at the chart right now and see, this is just going sideways, then start looking at other markets. Don't be scared. Yes, the Forex markets offer some fantastic opportunities, but so do the futures markets, commodities markets, and even the stock market. Look around. A chart is a chart. All right. So let's go to the last slide here before we wrap it up. So the 3 things that you must learn and that we will talk about in the upcoming sessions here, I will show you an easy method how to determine whether the market is going up or down. And you know what? This is a beautiful thing. If you can determine whether the market is going up or down, you also know when the market is going sideways, right? Because if the market is neither going up nor going down, then obviously there's just a third possibility it is going sideways. See, it can be simple. All you need to learn, you don't have to learn how to determine a market that's going sideways. You just have to learn how to determine whether the market is going up or down, because if it doesn't go in either direction, then it's going sideways. I will show you. I just briefly told you today what markets I'm trading and where are my profit points, but I will show you when to take a profit and when to exit with a loss. And sometimes that's the best thing to do. Always keep your losses smaller than your profits. And I will show you an easy method how to find the right market. So look forward to 2008, to the remaining part of this series. Moderator, how many parts have you planned? I think it was 5 parts. So today was to lay the foundation, to give you the right mindset of a trader. As I've said, so many people are right now browsing the web, looking just for a trading strategy. A trading strategy is one of the 7 things you need as a trader. There's more to trading than just having a strategy. This is what we covered today. In the next session, we will start focusing on trading strategies because it is important. I will show you how to determine if the market is going up or down, when to exit a trade, when to find good markets. Okay? So, there are the next chapters coming up, right? We have continued with some basics in the next session, and then we have 2 sessions about how to develop a profitable trading strategy. As I said, typically you'll find us here at the same time every first Tuesday of the month. Since the next time the first Tuesday is on January 1st, it will be on January 8th. But you'll see, just follow the fxstreet.com website. fxstreet.com, your premier provider here for educational resources and all kinds of resources that you need when you want to succeed with trading. And it doesn't matter whether you're trading Forex or futures. All these things that I'm showing you here are basically applicable to any market and to any time frame. They are even applying to when you're trading on daily charts or weekly charts. And this is the beautiful thing. The trading principles that I want to show you, you can use in any market. They're not curfew to a market. I'm not just talking about one market like the mini S&P or the euro currency. We're talking about all kinds of markets. You have to be flexible as a trader. You have to be like the Silver Surfer here and the Fantastic Four and the Silver Surfer. I'm a movie geek, I gotta say. You'll learn about this in the upcoming sessions. I sometimes quote movies. I just love it. Okay, you have to be slick and just surf through the markets. Go from one market to the other. Just looking for trading opportunities. Look where it's easy to make money. Okay, this is what you want to do. All right, guys. So, let me see. The next chapter is January 15th. Okay, I was wrong, guys. You're right. The administrator just helped me here. So the next session is January 15th. Thank you so much, Maud. I really mark it down in my calendar right now. Okay. Maud, what is the next session that's coming up here on fxstreet.com? Do we have another session coming up here in a little bit? Because you guys need to take advantage of this free education that you're getting here on fxstreet.com with excellent speakers. So there's probably a session following here in the next minutes. Yes, a session with Derek, a premium session. All right, guys. If I don't talk to you before, happy holidays. Let me just, because this is what we usually do at the end of the session here, I'm giving you quickly the information how you can contact me. Okay, so support rockwelltrading.com. This is the email how you can catch me. And if you want to take a look at our website, this is www.rockwelltrading.com. Guys, thank you very much for joining us here today. You have a wonderful day. I hope that everything went okay with the recording, that you'll have possibilities to review it. Believe me, for the next time we have it figured out how to work with the slides. We'll do some more tests. I wish you happy holidays, good new year, and I'll talk to you, if I don't see you before, on January 15th. All right. Enjoy the rest of the day. Thanks and bye-bye.